You're tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns while keeping you up to date with everything that you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications because every time we drop a new episode, money is made. Yes. Time. It is time. What's up, Anisha? What's up, Aldrin? What's going on, guys? From Cecily? Most definitely, man. Right. Let's get to it. Let's get to it. Today, we are going to be talking about index tracking. As I said, of the long term strategies, this one, this one's probably my favorite of the bunch. We've talked about what's going on, Shay. We've talked about two other long term strategies during this dedicated to learning series. The first we talked about was the opposite bar takeout. Undoubtedly one of the greatest strategies I've ever learned. Then we talked about the January barometer. I most certainly feel like that one was a blessing when I learned it. It it helped to guide me through years, and it ensured that I didn't stumble out the gate for the most part. Now, this one is also a guide. This one is also a guide. What it does is it guides you through the year, and in fact, it guides you through multiple years. And what I've learned is if you combine these strategies, all right, um, you'll have a heck of a toolkit for position trading. See, that's why I like all three of them together, right? We can call these the big three, right? We can call these the big three. And right out the gate, I'm going to show you guys how sometimes the January barometer can help hold you down before you have to, go into that index tracking aspect of things, right? Now, Okay. So here's the deal. Here's the deal. I have two things that you need to remember when it comes down to index tracking. All right? Two things. Number one, only a single day matters. Only a single day matters. That is the last day of the month. One day. That's all you have to worry about. And the second thing is that you need to focus on percent gains and protect your profits. Focus on percent gains, protect your profits. Now, the way this is going to work is very simple. At the end of the month, if you close above the 200-day moving average, that's my red line right here, right? At the end of the month, if you close above the 200-day moving average, right, you can remain bullish. You can hold your position. Good afternoon, Genia. Right? You can hold your position if you close above the 200-day moving average at the end of the month, right? The last day of the month, the only day that matters in this trading strategy, right? If you close below the 200-day moving average at the end of the month, right? Well, in that regard, we're no longer taking long positions until such time as we close back above the 200 at the end of the month yet again. Now, I talked about these two things that matter. I talked about these two things that matter. One, right, is that last day of the month, and two is the percent gains that you receive. As you can see, we're starting all the way back on the charts, okay? We are starting all the way back on the charts, right? Before 200-day moving average even came into play, right? But as you can see, right, you had a steady rise into 1994. Steady rise into 1994. Then you start to see a downturn, right, towards March of that year. And, well, that was that, right? You have the SPY's first close below the 200-day moving average. Now, why I talk about this percent gain aspect is very important, right? You guys, if you trade with me for a while, you'll notice that very often I may say, okay, we've seen a certain percent gain here. We're going to close this out and we're going to reposition, right? And what I'll usually do, let's say, and I'm going to keep this simple, and then we're going to start to go through the charts here. Let's say I open the trade with $1,000. Okay. Let's say I ended up gaining. Let's say I ended up gaining 65%. Let's make it 75%. Right. So I made $750. What I usually do, right, is I'll usually close the trade, right, and I'll reposition. I'll take that $750. I'll set it aside. And I'll put the $1,000 back in the game. Now, some of you guys may have always wondered, why does he do that? Why does he do that? Right? Like, what's behind that? First of all, what makes him confident to put his $1,000 back in there to begin with? First of all, right? Well, a lot of times it's I understand what's going on. That's it. I understand what's happening, right? What's going on, Terrence? And that's it. I mean, it's not that complicated. I understand what's happening, so I'm confident enough to take that $750, throw it to the side. That's my profit. Put my $1,000 back in there. Now, in reality, what that means is, right? What do I really have? What do I really have on the line? Right? I really have $250 on the line. Right? That's what I really have. We're gonna have $250 on the line now, right? Because I put 1,000 in. I already took 750 out. I put 1,000 back in, right? That leaves me with about $250 that's actually at risk. So in other words, if I lost the entire $1,000 at this point in time, I really only lost $250. This is key. This is key to trading this strategy. I need you guys to understand that. Okay? And as we communicate about this, you're gonna really understand why this is key. Right? So don't forget this part. You have to focus on your percent gain. Right? Focus on your gain that you've gotten, right? And for each of us, that's gonna be different because we have different risk tolerance and things of that nature. So, you know, Terrence he may be a guy that says, you know what, every time I make 50%, I'm gonna reposition that, right? Jeannie may say, you know what, every time I make 65%, I'm gonna reposition that, right? Shane may say, you know what, every time I double my money, I'm going to reposition that, right? What's going to end up happening though is you're going to realize you're going to recognize that there's a certain percent that's available, and you're going to start to be more aware of when to take your money out of the market and reposition that. And what you'll end up doing more than anything is you're going to end up stacking. You're going to have stacking cash, and your portfolio is going to grow. And in moments like this, when you got to close out down here, it's not going to matter that much. But right, at sometimes the January barometer gave me an early warning. Okay. Sometimes the January barometer gave me an early warning, and that really saved me from having to do this. Right? Now, in this particular case, I don't think the January barometer helped in this particular case here. Let me see. Let's see. First week was down January 1994. Let's. Oh no, so that's the first day I meant to say. Hold up. Let's go to the weekly for 1994. Let's go to the weekly. Let's go all the way out here. Where we at? Where we at? All right. Let's see. 94, 94, 94. All right. There we go right here, right? So first week was actually up, right? First week was actually up. Last week was down, right? And you actually closed to the downside right here. The January barometer would have saved you from having to close out down here, right? Because you had the first week was up, but the last week was down. Okay, but the last week was down, and right, and the month was down. Right, so you close in the negative for the month of January 1994. Okay, so I'm going to add a third thing that I want you to pay attention to, or that I want you to just remember. All right, and this one's going to sound like this one's going to sound like I'm talking to you guys like you're in the military or something like that. So so there were two things I gave you to remember, but I'm going to add a third to that. So here's the three things I want you to remember. Right. First thing, I want you to remember, right? You remember what it is? Only one day matters. Only one day matters, right? What day is that? Somebody tell me. I want y'all to put it in the chat. Only one day matters. What day is that? For this strategy, only one day matters. What day is it? Somebody tell me. Who can remember? The last day of the month. Thank you, Cecily. Exactly, right? The last day of the month. I tell y'all what, since Cecily got that answer right, I'm gonna do a giveaway before we close out. All right? Everybody say thank you, Cecily. I'm joking, I'm joking, I'm joking. Y'all ain't gotta do that. But I'm gonna do a giveaway before we close out. Since Cecily got that one right there. Right? Um, way to go, Thea, way to go, way to go. Right? Last day of the month. Exactly. Right? That's what really matters. Okay? So let me get back to 94 here. Right? We're going back, we're going way back, because that's what it takes here, right? So in 1994, right? Wait a minute, is this? Are y'all up to something here? Y'all up to something here? I don't know. Something's fishy here. Something's fishy here. I think y'all trying to get. I'm trying to get extra giveaways out of me. Is that what it is? I'm like, how are these last days coming in so late? um, great job, Jr. JRB. What's going on? I said, when Phoenix came in, I was like, okay, maybe she heard the question late, but I'm like, but 16's answer was there though, and then this one's coming in, I don't know. I'm watching y'all. I'm watching y'all like a hawk. Okay, that's what I want y'all to know. All right, now, peace, peace, peace. All right, so again, as I mentioned, right, um, as I mentioned, only one day matters. That's the last day of the month. The second thing I want you to remember, right, protect your profits, right? You have to protect your profits. But this particular strategy, the market is going to move. I mean, there's certain times where the market's going to move either very quickly in your favor, right, and then pull back on you really hard, or there's certain times where the market's going to, I mean, it's going to go for years without ever giving you another sell signal. You have to protect your profits. The third thing I want you guys to remember your training. Remember your training, right? Like I said, I knew that third one was going to sound like some military stuff, but seriously, remember your training. Because what did I just do there? Right? I just saved myself from. Let's get this straight here. Let's get this straight here. Hold on one second. Matter of fact, I learned a new trick, yo. I didn't know that this was I didn't know that this worked like that. Let me see here. So this would have been the last week of January right here, because it opened up. Let's see here. Yeah. So Monday here, right? And then this would have counted as the last week of January when you're looking at your chart, right? So you saved yourself from a 7% drop here. You saved yourself from a 7% drop here. So instead of closing out your position down here, you close it out here instead, right? You close it out here instead. Would have been like the first Friday of February, right? Something just to keep in mind. Something to keep in mind, right? Okay, let's keep going here, right? So you would have closed that out there, and then um, pretty much you'd have given the market some time, to really work all this stuff out. But anyways, right? All I told you was be cautious. That's all I told you was be cautious. So the next time you'd open up a position would have been right around here. All right. Now, I know. It's like wow, like we all the way up there, you know. But as I said, remember your training, right? Like you, you see something like this happening, right? This gives you a signal that we're back above, right? So this is the last day of August 1994, right? Last day of August 1994. We close back above the 200-day moving average. That's your signal that you can go long again, right? Now yeah, okay. If you're the type and you just want to go long right here, right now, then you do it. Of course, you had some drawdown here, and things were choppy after that. You probably ended up losing this particular trade right here. That's just the name of the game, right? Um, since after that, right? After that, you have a few other like choppy moments going on here, um, but you know you close back below the 200 MA here again. So clearly, as the January barometer suggested, so let's not forget that the January barometer warned us that this was going to be a rough year, right? The January barometer warned us this was going to be a rough year. So you already knew this. You saw this. You had this already on your mind. You saw this coming, right? Now this is nonetheless there's other things we're going to learn that are going to show us where we might have actually gotten in this position down here, right? We might have actually gotten in this position down here, right? And rode it up to close above here and whatever, but that's not what we're learning right now, right? Those would be other things I'll teach you guys in the future. Okay. For now, we're learning index tracking, which says if you close below in the last day of the month, below the 200-day moving average, right? You will hold no bullish position. Right? That's what index tracking suggests. If you close above the 20-day moving average, right, you will hold a bullish position. Plain and simple. Right? It does not say that if you close below, you have to take a short position. You don't have to do that. But it does suggest that if you close below, you hold no bullish position until you get back above, right? She had a choppy year in 1994, but again, the January barometer, it told you that. And if you would remember your training, right, then you would have been watching that weekly chart and you would have known this was going to be a choppy year to begin with. So your expectations would have already been low here. Now, the next time you close above the 200-day moving average, right, after this is right here. And man, oh man, this this was a heck of a trip, right? Right here, the last day of January 1995, right? The last day of January 1995, you close back above that 200-day moving average, and let me tell you, okay, you see this? Do you see this? Are you seeing this? 1996, you're still there. Let's keep going. All right. Now, again, we're looking for a close below it on the last day of the month. That's the only day that matters. So, yes, you close below the 200-day moving average here. It does not matter. But let me take you guys backwards a little bit, right? Let's go backwards a little bit here. Let's go back to when you first closed above this. So, right here, when you first closed above this. See, here's the thing. When I say protect your gains, right? All of this, leading all the way up until this moment here, when you come back here, or this moment here, all of that, all that gain, you got to protect that. You got to protect that. So as I said, right, as you make these moves, I'm just gonna let's just measure this a little bit here, right? Let's say it's from here to here, right? Now that's a 20% gain for the S&P, for the S&P. But imagine if that was an options contract. Imagine if you were in an options contract and the S&P 500 rallied 20% while you were in that options contract. I would argue, so that's going to be a pretty sizable gain, right? But what I like to do is I like to take positions. Let's say I take a position 6 months out, right? And then Right? So February, March, April, maybe I close out right here, reposition. Right? May, June, July, maybe I close out right here, reposition. So now I've taken profit twice. And if that worked out like we were just talking about, I put 1,000 in. I made a 75% gain over this 3-month period. I close that out. I put the 1,000 back in. Now I only have $250 on the line. What's happened when I comes over here, right? And I'm closing out here in July. What happens then, right? Let's say I got that 75% again, another 75% gain. Well, interesting. I cash out. I already had 750 in profit. I'm adding another 750 in profit. That's $1,500. So if I put another $1,000 in based on this right here, guess what? Guess what's happening now? Well, now I have $1,000 of profit in the market, and I got $500 of profit sitting on the sideline here, right? I'm up to the point where losing this trade won't even impact my initial balance. All right. I repeat, I'm up to the point now where losing this trade won't even impact my initial balance. I have to lose multiple trades now to be able to impact my initial balance. But anyway, so we said from here, right? So January, February, March, April, right? May, June, July, right? Okay, we reposition August, September, October. Here we go again. We're still up. See that? So I'm positioning 6 months out, maybe repositioning every 3 months, is what I'm saying, right? Um, that makes it a lot easier, right? All right, November, December, January again, right? Maybe I'm repositioning again, right? Okay. Well, February, March, April, we're still up, right? May, June, July, look at that, we're still up. And if we were to reposition right here, look at that. Boom. Okay, cool. And for the record, this is 1 month. This is 1 month right here. This was from July to August, right? So, but I just repositioned in July. So August, September, October. Look at this. I'm back up again. I'm back up again. I'm not saying it's going to work that way all the time, but pay attention now. All this came off of one simple signal, right? I closed above the 200-day moving average on the last day of January 1995, and I have been taking a position every 3 months ever since. And I just keep winning. I just keep winning. I mean, you guys have already seen the example of swapping that position out. That's why I say it's my favorite one, guys. You've already seen an example of swapping that position out. So in reality, I mean, I don't have to tell you. You know by now that I've literally just stacked the heck out of profits here. Come on now, you know that, right? I mean, you do know that. Look at this. Look at this. Right? Look at this. In 1998, it finally happens. It finally happens. In 1998, they finally get me, huh? 3 years later, I finally get hit. Okay. Well, and by the way, as I said before, you know, just remember what you're taught. Remember the things that you've learned. I mean, September is right. They're just not there. And I like to start taking my profits in August anyway. So I mean, around this time, I'd have probably, I mean, you have to, look at how far the 20 is away from the 200. There's so many ways you could have thought about this, but again, we're going to focus on what we're talking about right now, right? We closed back above here, October 1998. Okay, okay. November, December, January, we're taking profit again. February, March, April, we're taking profit again. May, June, July, we're taking profit again. Right? August, September. Okay, here we go. They got us. They got us. But look at how many times we're profiting. Now, watch this though. Watch this though. Because see, times come around. Times come around. Right? It's coming. It's coming. Your time's come. Right? Times come around where the timing just isn't always going to be there with you. Right? Either way, you close back above in November, December, January, February. Look at that. Look at this. Look here. Right? Right? March, April, May, right? But again, if you're focusing on your percent profits, I can assure you this much I know. If you're focusing on your percent profits from here to here, did something for you. Right? From here to here, did something for you. Right? So you're gonna have to learn to close out when you see large spikes in the market like this. That's one of the things. Like don't see this happen. Don't watch this happen right here. Boom. Don't watch that happen and just hold on to that. Okay? So yes, right? You maybe took your profit here, reposition and the market dropped on you, pop back again. You're like, yeah, okay. It's time to go again. Right? So that's all I'm saying. You know, you gotta right? You gotta learn to get yourself out of the way here. You know. But your losses are gonna come. No strategy wins 100% of the time. Right? Your losses are going to come. But I mean, as you can see how many wins we got in a row, right? Just from closing out and repositioning every couple of months. Right? You can see that. This doesn't mean you don't take your other trades in between. You take your other trades too. Take your other trades. Right? You like to trade, intraday positions and you like to day trade and take your weekly swings and stuff. Take all the trades in between. If you trade with me, I do it. Take all your trades in between. Take your arbitrage trades and all this extra stuff. Add to the right. Add to what you're doing here. Right. Okay. Boom. You close below here. Look at this. This was the dot-com bubble. Here's what else this does for you. Here's what else this does for you. Right. Dot-com bubble. That's what. Look at where you would have gotten out of the market during the dot-com bubble. You would have gotten out here during the dot-com bubble. You would have not seen all of this to the downside. Your signal to get out of the market came here on the last day of September 2000. This strategy protected you from the dot-com bubble. And you don't get a close, right? You don't get a close above on the last day of the month. Watch this now. Until it was over. Until it was over. Until April. Or was this May? Let's see here. Until May of 2003. And what you do, you go long again. Look at this. Look at it. Look at all the gains after that. Look at all of this, right? Now here's the thing. Here's the interesting thing about this, right? I told you it's my favorite strategy. I'm telling you why. I'm telling you why. Okay? If again, you can take all your other positions. If you like to short the market, you like to do things like that, right? Like to short the market. Okay, you like to short the market. I tell you what, this would have been a nice opportunity for you right here, right? Right? Maybe you drop, boom, lower high. You're like, okay, boom. Oh yeah, this looks like a short opportunity. You start shorting the market. I mean, you'd have had a hell of a time during the dot-com bubble. You would have had a hell of a time during the dot-com bubble. I mean, shoot, you got out early for one, right? Now, mind you, when we're not in times like we're in right now, where our president is throwing the market around like a rag doll, right? A lot of times I'd have seen all this before I took profits on some of my stocks, right? A lot of times, I would have seen all of this before I finally took some profit on my stock right here, right? A lot of times I'll do that. I'll wait long periods of time, right? You guys see me taking profits more often on even my stock portfolio because of what's going on right now, right? But during normal times, I'll take profits, a lot less, right? Okay, look at this here. Look at this. All right, close above here. Don't close back below until '04. All right, until August of '04. You went above the 200-day moving average in May of 2003. You don't get back below it until July of 2004. But if we're doing like we need to do, May, right? June, July, August, right? June, July, August, profit, right? September, October, November, that's another profit, right? December, January, February, we're taking profit again. I'm just showing you how many times you could have taken profit in between May of 2003 and July of 2004. That's already 3 times right there, right? March, April, May, right? You probably been down a little bit right here, right? So again, understand that every strategy is going to have its moments where you know you're going to take your losses every once in a while, right? But you guys can clearly see how, especially if your goal is to take your profit every 3 months, especially if your goal is to take your profit every 3 months during this position, then guess what? I think I saw probably 5 times as many wins as losses here already, I'm probably selling it short. Y'all tell me how many y'all saw. I'm saying at least 5 wins for every 1 loss. Y'all tell me what y'all saw since I've been talking. Is it more than that? Is it more than that? Y'all tell me. Is it more or less? What y'all say? All right. What do we talk about? You get in here, October of '04, right? Much more, right? Much more. I know it's more, but I'm just, you know me. I like to sell it short, right? When I used to work in marketing, right? They used to tell me I was excellent at underselling and over delivering. Right? When I worked in marketing, they told me I was an expert. I was excellent at underselling and over delivering. Right? Hey, our product is right. It'll do the job. Yada yada yada. Then all of a sudden, we give you twice as much as you asked for. Now watch this though. This is one of those moments right here. Boom! You get in here, and November, December, within 2 months, not even 2 months, within just over a month, you do all of this. Within just over a month, you do all of this. Like I said, right? Don't let this stuff happen to you here, where you watch this happen. Right? That's a 7% gain in the market. Don't watch this happen and not take your profit. I'm taking the profit right here. Okay? I'm taking my profit right here. Okay? So that way, when times like this come about, right? Boom, and then we're back down here. I already got mine right here. So by this point, I can be closing out at somewhere around here. I'll probably close out right here, more than likely, and say, okay, let me get right. But hey, you close back below the 200-day moving average here, right? And so you hold no long positions. For those that are just joining us, we are talking about a strategy known as index tracking. Strategy known as index tracking. And it's a very simple strategy. I'm going to repeat the parameters here. Have three things you want to remember when you are index tracking. Plain and simple. Only one day matters. What day is that? It is the last day of the month. Only one day matters, and that is the last day of the month. If you close above the 200-day moving average on the last day of the month, you can hold long positions in the stock market, right? If you close below the 200-day moving average, you will hold no long position. The second thing I want you to remember is protect your profits. All right. The second thing I want you to remember is to protect your profits. Right. And so you want to take profits incrementally. All right. You're not here to set and forget and just watch, watch the whole time. The third thing I want you to remember, right, is just remember the things you've learned. Remember your training. Right? That's a very important thing. All right, give me 1 second, guys. All right. So as I mentioned, guys, all right, only only three things that you need to remember. All right. Number one is only one day matters. That is the last day of the month. All right. On the last day of the month, if you close above that 200-day moving average, you can continue to hold long positions. On the last day of the month, if you close below the 200-day moving average, you will no longer hold long positions. And yes, yeah, you definitely want to use the daily chart. You definitely want to use the daily chart. Okay. That's the best thing for you to do because it's gonna let you know when when that day is actually closing below. You don't want to use the weekly. You don't want to use the weekly. Okay. Now, okay. On the other thing I want you to remember here, the other thing I want you to remember here is to protect your gains, right? Cash out incrementally. Don't just hold these things forever. Because listen, I'm telling you, you're gonna be in so much profit. It's gonna make you feel like you want to hold it forever. Don't do that. Do not do that. Okay. Start to pay attention to how much gains you usually get over certain periods of time. Like for me, I would close out like once anywhere between 1 month to 3 months, right? Like if I see a large amount of gains in over just one single month period, I'm taking it. Protect your gains, right? Reposition. That way, the market is not taking from you. The market is taking from itself whenever you do end up losing, all right? Or whenever you do end up seeing some drawdown, right? Um, Now, the third thing here is that you wanna remember your training, right? Combine the big three, right? Those three elements: index tracking, the January barometer, right? And eventually you realize that in some of these cases, the monthly bar takeout coincides with that break back above the 200-day moving average. It happens a lot, right? So use those things in your favor, right? Also, when you're above that 20-month average, you can actually say, okay, cool. I know I'm above the 200, but let me wait for a monthly bar takeout to take my next long position. Okay. Um, those are some of the things that actually matter here. Right now, the next time we closed above was June of '05. Right, we closed right back above it again. You see how we pull below it here? See how we pull below it here? So look, by the last day of the month, you were back above it. That's why I said only the last day matters. Don't panic and do things that you don't need to do. Right? Only the last day matters. Right here. We pulled below that thing in October of '05. We were right back above it by the end of that month. Right? So guess what? On we go. Look at all that. Look at all of it, right? Oh, pull back below it in June, right? Back above it by July, right? Pull back below it in July, back above it by August. You see this? Okay. On we go. On we go. That's one of the number one rules I want you to remember. I repeat, only the last day matters. Okay? You would have avoided taking unnecessary losses here. You would have avoided taking unnecessary losses here. You would have avoided being scared out of the market. Now, don't get me wrong. Don't get me wrong. Don't get me wrong. Right? Let's say you took some profit right here, and right here on the monthly chart, you were like way off of the 200 day, the 20-month average, right? And so then maybe this was a pullback to the 20-month average, and maybe here was a monthly bar takeout. I can assure you, I'm saying it, right? I'm saying it, but I'm saying maybe, but I'm saying I'm certain that's probably what happened, right? So we're gonna remember this, right? Uh, May '06. May '06. We're gonna come back and look at that, okay? May of '06, right? We're gonna come back and look at that. But look at this though, right? May of '05, you went back above this 200-day moving average, right? What's up, Issachar? What's going on, man? Went back above the 200-day moving average, and you did not close back below until guess when? Guess when? '08. '08. Remember this strategy also protected you. It also protected you from the dot-com bubble. Here we are again. It's about to save you. It's about to save you from, right, the great financial crisis. Right? In '08, you closed below that sucker right there, that 200-day moving average, and you don't close back above it until the great financial crisis was over. And now, if you know how to handle your business, you would have had a jolly time shorting this market. Okay? If you know how to handle your business, you would have had a great time shorting this market. But let me tell you something, right? Let me tell you something. This saved your life. You took all your look here. Look at all this. Look at all this profit from '05 all the way to '07 December, just before '08. Right? That's 2 years worth of profit. That's 2 years worth of profit in the market that you'd have just been cashing out on now. And guess what? This saved you on some taxes, right? Because you got to hold your stock gains for 2 years, and you say, okay, yeah, let me go ahead and let me go ahead and take some profits now, right? Look at here, look at here. Now all of a sudden, the market is crashing, but you got to stay out of the way because you hold no long positions unless it closes above the 200-day moving average at the end of the month. Okay? Let me recite those three things again. for those that are just joining us or those that missed it before, let me go over it again. Okay, 3 things you got to remember with this trading strategy. Number one, only the last day of the month matters. Only the last day of the month matters. If you close below the 200-day moving average on the last day of the month, you hold no long positions. No, I'm not telling you to sell your whole stock portfolio or something like that. Okay, we're talking about trading. We're talking about options. Okay, but if you have gains in your stock portfolio, maybe you can cash in on some of those gains, right? If they're worth cashing out on. All right. Now, last day of the month, all that matters. You close above at the end of the month, you can hold long positions. You close below at the end of the month, the last day of the month, you hold no long positions. Number two, the second thing I want you to remember is protect your gains. All right, watch what happens here. Watch what happens here. All right, you close above for the first time since the great financial crisis, and then boom. All right. Matter of fact, hold on. Let me say it with my chest. Let me say it with my chest, Oliver Velez style. All right, you close above for the first time since the great financial crisis, and then boom. All right, my bad, y'all. I didn't mean to hurt y'all air. Oliver Velez told me to do it. Y'all go to Oliver Velez on YouTube and complain on his page. You tell him that he told me I had to say it with my chest, and I did that. So if your ears were hurt, or if I like scared one of your kids or something like that, you know, not my chat, his chat. Okay, you know what I'm saying. All right, I'm saying a little lower this time. Boom, right, boom. All right, you out there. Okay, so the reality is, you got to protect these gains right here. You can't give all this back. You can't give all this back. What's up, Moji? Now you want to say something, huh? Okay, I see you. All right. Right? You got to protect these gains. You can't give all this back. All right? So I like to take my gains anywhere between 1 month, 3 months, or a certain percent, right? So after if see how sharp this was? Boom. Right? You take your profit right here, your first little profit, reposition, and then you got all this going on. Right? A couple months later, take some profit, reposition. You keep doing that. You keep doing that. And let me explain to you how this works. All right. For those of you that missed it earlier, let me go back over it again. Let's say right here, when we close above the 200-day moving average, I put $1,000 in the market. All right. All right. Let's see here. Open trade, $1,000. Okay. Let's say, boom, right? This happens here. I'm like, you know what? I got a 75% profit, right? Okay. Let's say I got a 75% profit. Remember, we're trading options. We're trading options, okay? A 75% profit. What do? I close that out. I reposition. All right. I reposition. I put my $1,000 back in. I keep the 750 that I just made. All right. So how much do I have at risk now? Right now, I only have $250 at risk because the other 750 is already in cash. So now really I only have $250 I'm risking in the market from this point right here. Boom. Let's say I take my profit again, right? 3 months later, right? What is that? September, October, November, December. December right here. I take my profit again. All right, cool. So let's see here. All right, I got another 750, right? So then that puts this profit at 1,000. Right? I put this profit let's put this profit at 1,000, right? So now I have $1,000 in profit. Okay. So if I put $1,000 back in the market, how much do I have at risk? Zero. I have zero at risk. Okay. So this is what I mean when I say protect your gains. Take your profits. I'm not saying early, but take them relatively often. Right? Focus on percent gains. If you ask me, focus on percent gains. Now watch this though. That's the third thing I want you to remember. I want you to remember the things you taught. Remember the things you were taught. Remember back in '94, right? I know, right? We went way back on the charts, y'all. Because I love going way back on the charts with you guys with this stuff, right? In '94, the January barometer would have saved us from having to wait for the market to do this right here, right? Because that January in 1994 was, it was already, like that January in 1994, it was already a bearish, a bearish closeout. Right now, we look at that from the weekly chart. We watch the January barometer from the weekly chart. Okay, that's what we do. All right. Now, from here, this is no longer January, but we can look at this from the monthly perspective. Right. After taking so many gains, I like to start looking at the monthly chart and saying, okay, where are we now? Right. Or you can even combine it with stuff like the RSI, right? Maybe see some divergence happening and stuff like that. Okay, here's a divergence right here. Okay, boom, little pullback, right? Rally back above everything. Maybe I go long again, right? Boom, right? We drop back, we go back above everything. Maybe I go long again, right? So maybe you see stuff like that happening, and so you can use, right? Remember the things that you know. Don't allow this strategy to take all of your knowledge and push it on the back burner. No, use all of your knowledge with this. So that way you know when to move, when to shake. I like this the stuff I teach you guys is not meant to replace everything you know. Now don't get me wrong, some of that stuff that y'all know, some of that stuff that people taught y'all may be the wrong stuff, right? I won't lie. So some of that stuff maybe we do need to just kind of like, weigh it out, right? But the reality is, some of like a lot of the things we know are helping us right now. So when you learn something new that's great like this, you can say, you know what, man, if I combine this with this, I'm gonna do really well. Let's keep going though. All right, here we go. In 2010, you closed back above. In 2010, you closed back above the 200-day moving average, and I mean, wow, right? Boom, right here. You know you gotta be taking profit right here, right? Come on now. Come on now. Right? This, that quickly, you need it. Let me get that. I'm repositioning. Boom. Here we go again. All right? I'm repositioning. Right? What was this? November, December, January. Yeah, February, right around here. I'm repositioning right now. All right, cool. Yeah, okay, cool. They got me around here, no problem. No problem. I'm not really worried about that. Why? Because I've already made so much money that when these moments come about that catch me with a little bit of off timing, I don't care that much. But guess what though? But guess what though? The reality is that something else I know might have kept me from repositioning here. Something else I know, let's see. Oh, divergence. There's a divergence right here. Divergence. Right? Market moves higher. Here. RSI, lower high. Here. Okay? You seeing this now? So yes. So sometimes you may get caught off guard with timing. Other times, everything else you know can help you, right? But what you do know is you're looking for long positions. Why? Because you're still going off of this close right here. You're still looking for long positions. So boom, you pull back above there, boom, you're gone. All right. So by this point right here, hey, look, you know what? Let me go ahead and take that profit. Okay. Then all of a sudden you got a pullback happening in the market. Right? But you're still above that 200. Maybe this happens, boom, a quick one. Maybe you got another quick profit there, right? Either way, you got probably got a few profits you took in this time period. Nonetheless, the next time you close below the 200 moving average is here, right? In September 2011. All right? All right, you stay out of the market, stay out of the market, stay out of the market, boom. 2012, We're back. 2012, we're back. We're back in business. This happens that quickly. What do I do? This happens this quickly. What do I do? Y'all tell me. Y'all tell me. If this happens this quickly, what do I do? Anybody? Right? We closed above for the first time here. Right? Close. Right? Take my profits. Why would I hold on to this? Remember, I'm in options. I'm in options. A move like this most certainly paid me well. It most certainly paid me well. Okay? Let's keep going now. All right, we stayed above there this whole time from 2012. Let's keep going. When was the next time? Look at all this. Look at all this money. I'm not gonna keep telling y'all take profit here, profit here, profit here, profit here. You know the deal now. Look at all this money you're making. Oh yeah, you see this? Yeah, but boom, we didn't close below there. Let's keep going. Finally, finally, we get a point where they tell us no long position. Oh, finally, finally, we get a false signal, or however you want to put it. Finally, we get a moment where they're telling us, well, yeah, it's cool to be in the market here, and but before you know it, we're closing back below this again, right? But it did save us from all this drawdown. It did save us from all this stuff right here, right? And then by 2016, you're back in again, and then look at all this money. Look at this money, right? Look at this, 2018, it happened, right here. But by before 2018 is over, you're back above again, right? See that? See this? Now you know you see the profit in here, and then by the time you look up, 2018, 2018 happens. Here's the craziest thing, right? 2018 happens. You have this big drawdown in 2019, right? So this kept you out of the market there. Kept you out of the market. So you didn't have to go fake out here, fake out. No, no, no. This kept you out of the market because it didn't close back above until when? Until right here. Right? Big move here. You know you should have took profit. I ain't gotta tell you that. You should took some profit. Right? Oh, sorry. Close below here, back above here. Right? You don't close back below until here, in which case you were below this point here. Right? So, this is one of the reasons why you want to when you want to protect your profits. One of the biggest reasons why you want to protect your profits. All right. So now, I repeat, for those that are just joining us, for those that maybe didn't hear what I said before, three things you need to remember. Remember that only the last day of the month matters. If you close above the 200-day moving average in the last day of the month, you can hold your long positions. If you close below it the last day of the month, you will hold no long positions. Right? We're not talking about your stock portfolio. We're talking about options, right? We're talking about trading options here, right? Now, the second thing I want you to remember is important relative to the first thing, right? You close above that 200-day moving average, the last day of the month, and you start to see these gains. Here we go. We're back above it, May of 2020. Start to see these gains, right? You start to see these gains. Look at all this. Look at all these gains. Protect these gains, right? You want to be cashing out with profits along the way. That's the second thing I want you to remember. Cash out on profits along the way. So whether it's I cash out every time I earn 33%, 66%, 99%, 150%, 200%, whatever it is, right? For me, like I said, cash out every 3 months and reposition, right? So you close above it in May, right? June, July, August, right? June, July, August. Let's do this, right? Take some profits, right? September, October, November, right? You're gonna take yourself some profits. December, January, February, take yourself some profits. You see this, right? So if you were taking profits every 3 months here, right, you're good. And also, anytime the market spikes, right? Anytime the market spikes, right? a spike like this away from everything, right? Take some profits. Okay? Take some profits anytime that happens. Right? Wait for the market to cool off and get your reposition. Right? So number three, the third thing I want you to remember is remember everything that you already know. Remember the things especially the things that I've already taught you. If I've already taught you some things, remember those things. This doesn't take away from those things. This adds to it. Right? So here we are. Here we are. Right? That took you all the way to 2020, all the way to 2022. Okay? You start to see some downside here, right, in 2022. But guess what? The January barometer, if you remember what you learned, right, the January barometer would have taught you, right, that you didn't have to wait until you close all the way down here. You'd have gotten out of the way already, right? And then by this point, you'd have already known to be out of the market, right? But watch this though, all right? Sure, the January barometer, but get this. Look at all this divergence. Look at all this divergence, right? We're still moving higher. What's the RSI doing? Look at all this divergence. I mean, this is just major divergence here, all right? Line it up right here. Let's go vertical. Line it up, all right? Look at the RSI at this point, from this point, right? Okay? Versus the RSI when it was at this point. Okay? Do we see that? Do we see that? Right? Remember what you know. Remember what you're taught. Right? So you probably would have took your profits here already, waiting for that pullback to come. Then the January barometer says, well, lucky you. Right? Remember what you know. What else do we know? In this area right here, when we start to see this divergence, this area right here, the Federal Reserve said, starting next year, we're going to start raising interest rates. That's what the Federal Reserve said in this moment right here, in this area right here. So that also said, take your profits. Right? And then boom, market gets hit. And guess what? Guess what? You don't close back above that 200-day moving average on the last day of the month until, guess when? January of 2023. What have we been doing since January of 2023, y'all? Y'all tell me. What have we been doing since January of 2023? Anybody care to enlighten me? What have we been doing since then? Making money. Right? Look at this. You got your close below right here in November. You're closing right back above by the end of November. We're going to keep making money. We're going to keep making money. We're going to keep making money. Right? There's your divergence again. Here it is. There's your divergence again. Let's do it. Let's do it. Right? Early warning signs? Or what? Early warning signs or what? There's your divergence again. Let's do it. Let's do it. Right? Let's do it. Right? There goes your divergence again. Here it is. Coming right into 2025. There it is again. Right? Just remember what you know. Just remember what you know. Okay? The market doesn't have to catch you by surprise. Boom. Close below. We have not, I repeat, we have not had a close back above this point just yet. What's the only position we're holding right now, ladies and gentlemen? All right? We're holding a short position right now. All right? Now, don't get me wrong. This does not mean you have to go short the market. My point is, right? Here's the point. We've yet to prove that this is a move we should handle. Now, on top of that, we have to remember what you know. Remember what you know. Donald Trump is cooking the market right now. Okay, he's got this thing in a stir fry, whipping it up. That's what's happening right now. Okay, so I want you guys to keep that in mind. All right, so that's that, right? You guys have you guys should have picked up on some solid things here. Um, as usual, I'm gonna open up a clubhouse room, all right, and we're going to we're gonna do a little Q&A here, all right? In the event that you guys have some questions, I'm gonna answer those questions, all right? What's going on over there? Hang tight. Sorry about that. There we go. I'm over here setting up this giveaway real quick. 1 second, y'all. Just setting up this giveaway. So let's see here. Let's see here. What y'all want? Y'all. Let's see here. Let's do a let's do a. You know what? Yeah. I'm giving away an Equity Channel T-shirt. Can I give away Equity Channel T-shirt? Is that okay with y'all? Can I give away Equity Channel T-shirt? Can I give away Equity Channel T-shirt, y'all? Yes. Okay. I'm just making sure. You know. Yeah. If y'all don't want them with our name on it, I can understand. I understand. I understand. Now, y'all want me to give away an Equity Channel T-shirt or an Equity Channel mug? Which one? An Equity Channel T-shirt or an Equity Channel mug? Which one? Get you mug. All right, mug, T-shirt, mug. Come on, where's the rest of the votes? Uh-oh, mug is winning. Mug is winning. Mug is winning. All right, hold on. Okay. Uh-oh, T-shirt with a vote. Oh, mug, T-shirt. Uh-oh, T-shirt's coming. T-shirt's coming. T-shirt's making a comeback. T-shirt's making a comeback. 1, 2, 3, 4 for T-shirt. 1, 2, 3, 4 for mug. Oh, T-shirt it is, y'all. T-shirt it is. We're giving away a T-shirt. T-shirt made a hell of a comeback just now. T-shirt made a hell of a comeback just now, y'all. Man. Mm-mm-mm-mm-mm. Let's see here. 1 second here. Give me 1 second. I'm just setting this thing up. Mhm. Just setting it up. Un momento, por favor. Give me 1 second. I gotta do like a all right, here's how this is gonna work, right? So let me see here. Give me 1 second. 1 second here. 1 second. Okay. Okay. Mm, 1 second, yo. Just all right. Here's how this is gonna work now. All right. I am going to drop a link to the candle. All right. I'm gonna read that question in a second. He said, check these voters' registrations. All right. I am going to here's the deal, all right? Here's the deal with the giveaway. I'm gonna drop a link. I'm gonna drop a link in the chat. And how the giveaway is gonna work is simple. How the giveaway is gonna work is simple, right? The first person to cash in on the giveaway wins the giveaway. Everybody got that? Y'all got the rules? Y'all got the rules? First person to cash in on the giveaway wins the giveaway. All right, and then I'll say who I'll give the congratulations to whomever. I'm just making sure y'all get the rules. Let me make sure y'all got it. So this chat right now, I'm about to drop it in this chat right now. Give me 1 second. Okay, and the first person to cash in is the one that gets it. All right, say giveaway link. This is my giveaway link. There it is. The link. You know what? Hey, you know what I should do? The craziest, it would be crazy, but I'm not gonna do it this time. I'm not gonna do it this time. Um, oh, yo, Terrence is dirty. He said that's okay. Terrence is dirty. You ain't gonna help Shay out? That's crazy. All right. The rule is this. I'm going to put a link in the chat. This chat right now. Okay? I'm gonna put a link in the chat. The first person to cash in on the gift will be the one that gets it. That's it. The first person to cash in on the gift will be the one that gets it. All right, y'all ready? All right, here we go. There's your link. There's your link. I'll let y'all know who won the giveaway. You got click on the link and it'll click on the link. You asking questions? Oh, you already late now. You know you ain't getting the giveaway. Click on the link and fill in. You got to fill it in to cash it in. Oh man. You know what I'm gonna do next time though? Um, Next time I want to do a giveaway, I'm gonna see who's paying attention. Look, oh, Cece's putting laughing emojis in the chat. We know she ain't getting the giveaway. We know that much. Oh, Jar Biz got the giveaway. All right. Emoji said it's gone. Way to go. Who was that? Who was that? JRB. Way to go. Good stuff, man. Good stuff. All right. Oh goodness. Oh goodness. Nope. No, he is not. Oh goodness. So he must have a short address. Congratulations to JR. All right. We'll make a deal. We'll make a deal, okay? We'll make a Okay. Shout out for the gifted sub from Aldrin. All right, shout out for the gifted sub from Aldrin. Um, Jr. I'm gonna send you. I'm gonna send you. Um, I'm gonna send you a chat here on. I'm gonna send you a chat here on Twitch, right? Um, you'll see a link to our premium channel. You see a link to our premium channel that'll come over to you. All right. We I'll send it when the I'll send it when the stream is done here. Okay. Um. Look at Terrence. Look at Terrence. All right. Um. So now, here's the deal. I am about to open up the Q&A. So anybody that's got questions, all right, we're gonna answer those questions over there. I think it was Mimi that had a question there. So say the candle closes red on the last day, but closes above the 200. Do we wait for a pullback to one of the MAs to enter? So that's why I said, yeah, just use what you know, right? Use what you know, right? You got to use what you know. So when it's all said and done, like I didn't get a gift on my birthday in March, but I love delayed gratification. Love it, love it, love it. Yeah, so you got to use what you know, right? So if the market's closing in that way, um, and you feel like that there's a pullback coming, most certainly do that. Yeah. Like the teachings of Oliver Velez says, you like to get in, closer to 20 MA, right? So yeah, so maybe you do wait till you get closer to the 20 MA and make that move, or maybe you wait until the 20 MA is closer to the 200 MA and you make that move, right? Those are things that you can make decisions to do, But the key thing is, that you're more confident in your long positions when this is happening. All right. Okay. Well, I will see you guys in the clubhouse session. For those that are not already um, members of our clubhouse, all right, this is our normal Telegram that you can be a part of right here, right? This is our normal Telegram that you can be a part of right here. Feel free to tap in with us. We're about to be heading over to Clubhouse, and we'll share the link in there. All right. Also, give me 1 second here. Let me just do this now while I'm here, since I'm already on Telegram. Okay. Un momento, por favor. All right. JRB. If you check your chat, your back channel, your chat here on if you check your back chat here on Twitch, you'll see a link to the Equity Channel Premium. So hey, you know what? Basically, so when Alvin gifted you when he gifted you uh, 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 a sub to the Twitch, he also, at that same moment, gifted you a month in the Equity Channel Premium, man. So, tap into that and see what it's all about, man. It gives you access to our It gives you access to our index, right? So these are all the investments that are linked to our stream. So all the investments that our stream makes, right? It gives you access to that. It gives you access to the trades that we take together. It gives you access to some of our learning materials that we have over there as well. We got a library over there. We got all kinds of different stuff over there. All right, and we have a subscriber forum. We get to talk to some great people about what you're doing as a trader, or share some information that you have. Maybe you have some things that you want to share with folks. You can do that as well. All right. So I'm gonna pop over to Telegram. As you guys know, I'll probably be over there for about 30 minutes on Clubhouse, and then I'll be closing that out, and we'll go from there. Right. Everybody be blessed. Stay well. Be blessed. Stay well, and I'll talk to you soon. Later.